It was the stock offering that had investors the world over giddy with excitement. Alibaba's listing on the New York Stock Exchange raised $25 billion. Its share price surged 38% on its debut, but in Hong Kong, there was little to do besides wonder what might have been. The Hong Kong Exchange lost out to New York on Alibaba's IPO, in part because it doesn't permit dual-class shares. Those shares give executives special voting rights and dividend payments not available to the general public.
The US has provided an infrastructure and framework that's allowed them to list there on their terms. Hong Kong hasn't provided this. We believe that if we provide the ability for these companies to come to Hong Kong, many Chinese entrepreneurs would far rather come to Hong Kong than to go to the US in a very unfamiliar jurisdiction, unfamiliar time zone, and unfamiliar legal system.
For decades, Hong Kong Stock Exchange has served as a gateway for Western investors trying to get access to Chinese companies. But as a growing number of new economy firms are making up IPOs across the world, the bourse here has struggled to compete to get their attention. Now HKX is proposing a revamp of its regulations. It wants to relax listing rules on its main board and its second venue, the Growth Enterprise Market. Crucially, it could also include a third board to allow dual-class shares, but the plans come at a cost.
If you bring in dual-class shares, you'll be raising governance risk, you'll be raising investment risk, you'll be lowering the importance of minority shareholders, and you won't have any counterbalancing class action or stronger disclosure.
Some say the high standards the exchange has set are precisely what distinguishes the city apart from its rivals and ensures success. And a third board may only be considered third-rate.
There are always people in Hong Kong, some of the banks, some of the intermediaries, people on the business development side of the exchange who want to attract as many IPOs as possible. And one way of doing that certainly would be to lower standards. I mean, you certainly would attract more IPOs. But whether that's best for the market overall is what the debate is about.
A consultation on the proposed changes is due to conclude in the coming weeks, and any major changes could have seismic ramifications. Flynn, TRT World, Hong Kong.